Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Thursday, February 22nd, 2018, and this is the Daily Report for Gold and Silver. Calmer waters return to financial markets, with gold trading in a pretty tight range today, closing up about $1.90 on the day at $13.34, a 2-cent decline in silver, closing at $16.59, and that is all within the light of a weaker U.S. dollar, down about 25 points or 0.3% below 90 at 89.66. Dow Jones Industrial Average has a pretty dynamic recovery, closing up about 164 points, and slightly lower prices in Bitcoin futures, 98.60 and 99.05, respectively, in the CME and the CBOE futures contract. Today, traders witnessed a return to much calmer waters as gold traded quietly and in a muted trading range, closing up about 80 cents on the day, currently fixed at $13.3290. Now, yesterday's trading activity, while quite volatile, it was the knee-jerk reaction to the Fed minutes from January that were released yesterday at 2 o'clock Eastern Standard Time. What was extremely unusual about the knee-jerk reaction yesterday was the time span in which it unfolded. Typically, a knee-jerk reaction will occur rather quickly, roughly playing out in a 5 or 10 minute time period as the market adjusts to the new data released. In this case, the way that it unfolded was an initial reaction that was opposite from what the eventual interpretation of the data was. Because as the minutes were released and first read, was quite dovish. That dovish sentiment, of course, moved the needle higher in gold, the dollar lower, and continued a rally in U.S. equities. We actually saw the market move to about $13.39 after opening at roughly $13.31 on the day. However, it was realized within a time span of about 20 minutes. We're looking at a 10-minute candlestick chart. But after about 20 minutes, it occurred to traders that this data did not include recent economic data about major upticks in inflation, which would have a dramatic impact on how the Fed acts in terms of their current dot plot and how quickly they raise interest rates throughout the year, and how many rate hikes we would see in 2018. As such, once that became evident, we saw this market really sell off from approximately $13.38 down to these lows at $13.25 before trading in a narrow trading range that now incorporated the CPI data that came out after the FOMC meeting in January. Which takes us to today's market activity, which is fairly muted. And although the market closed above its open today, as seen by this green candle on a daily chart, it only closed 70 cents higher. But I think more importantly, it traded with a lower high and a lower low than yesterday's trading. My sentiment is still neutral to bearish. I believe that there is the potential for more downside price action in gold. Our current target still resides at roughly $13.17, and that, of course, is the 38% retracement level of the rally, which took gold from roughly $12.35 up to $13.65. And traders, the muted action absolutely carried over into silver. And silver did have a lower high than the previous day, but it did have a slightly higher low, very much like an inside trading day, with silver closing off about 3 cents on the day. What I find most interesting right now in silver is that if we do, and this is a very rough trend line, a series of lower highs to give us our resistance line, we can absolutely see that the range in silver is contracting. And more so, we are getting very, very close to the apex. Typically, in a compression triangle, which I believe is what we are witnessing right now, as market prices move towards the apex of this pattern, it will break and break hard as the energy is released. And typically, there is a higher probability that the market will break to the prevalent current market direction, which means that we could easily see a further decline in pricing and a fairly hard break to the downside in terms of silver. And traders, lastly, I do want to take a look at Bitcoin, this being the Bitcoin futures contract from the CBOE, which is a single Bitcoin contract. We did get a further decline in Bitcoin pricing, with Bitcoin closing at $98.30 per coin. And that's after having a substantial rally coming off of these lows at about 6,000 and trading to just about the 38% retracement level before moving back into a corrective mode. That's the mode that we're currently in. My current target for Bitcoin rests at about $9,300, about $500 from here. And we could in fact see pricing move to that point before finding support and then moving higher. Of course, I also see resistance at approximately 11,500. Traders, yesterday we witnessed something rarely seen and fairly unique in that we had the typical knee-jerk reaction to release of data, although that knee-jerk reaction occurred over a 70-minute period of time. And that's, of course, what we focused upon when we looked at our technical studies today. I still am neutral to bearish in gold and am looking for lower pricing. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up, and bye-bye.